And I thought we were going to have a couple of presenters this morning, and they backed out. So we will have a few more minutes to be able to discuss other things that people are interested in along the way. So I am going to quickly share my screen here. Gene, can you keep an eye on those people coming in the room there?
I will.
Okay. So Gene is a co-host here. In case something happens to me, holler at Gene.
Oh, great! Thanks.
He should be able to take care of whatever else happens here. So hopefully we won't have any kind of issues, but you can never tell. Sometimes things happen.
Yes.
All right. So I'm sharing a screen here. Steve was mentioning that this is not really readable on your screen, and I can't figure out a good way to zoom everything. Well, let me try zoom it real quick.
Oh, thank you.
Let me try zoom it, see if zoom it will make it bigger here. Oh, is that Steve? Is that better?
Oh, yeah.
Oh, yeah.
What
Okay.
due to on Monday?
All right. Okay. All right. So let me zoom it in here. So what I've got in the lower left part of this screen is basically my list of things to do as to what I was planning on covering here today. Simplified definition of Bitcoin, really simple. Price change, open to close versus close to open. Larry Williams, %R with various hierarchy triggers. And so you can basically follow along as I'm going through this. I hopefully will stay on that particular schedule there in the lower left. So people have asked, I keep on getting questions since I'm doing finance and stuff. People ask me about what is Bitcoin. This is really simple explanation. Somebody has got their microphone unmuted here. But anyway, so this is a buck, right? And if you look at the dollar, there's this little tiny number in the corner here, and that's basically the same as what a Bitcoin is. Bitcoin is basically a number, because the Bitcoin throws out the paper. So they have all sorts of numbers in there to basically guarantee that it's valid, it's secure, and all that kind of stuff. But it's basically the same thing as a dollar bill, except that the Bitcoin, there's only a finite number of them. With dollar bills, they can print these things at will. So that's just a real simple overview. Hopefully, if anybody has any more details on it, hold it off to some other presentation. Let me hide this one here. So let me go through that one more time. So I have minute bars, 30-minute bars, daily. I have overnight information here. This thing's basically tracking things 24 hours a day. So you can see when trades are actually happening, after hours, before hours. And then I've got a weekly chart here. But I have all of my stocks here. All of these things are linked. So when I click on one of them, everything updates, and I can see what happens with Agilent Technologies. I can see it minute bars, 30-minute bars, daily, weekly, and even overnight. And then if I decide I want to go and buy something or sell something, I just go over here and click on this matrix and say buy or sell, whatever I want to do. So it's really quick for me to do this. And I can track multiple ETFs, large stocks, a large open interest, just general stocks. But I can also pop up something else too, which is something like this. So this is also linked to my radar screen here. So one of the questions I had is, when are stocks moving? Are they moving overnight, or are they moving during the daytime? And I can go and click on this. So this thing, the white is overnight, and the gray is overnight, white is the daytime, and then this is basically the price percentage gain. So you add this to this and you get that. All right. So if you look at Alcoa aluminum, you'll see that almost all of the gains happen during the daytime. Very little happens at nighttime. Apple, most of the gains are happening at during the daytime and very, very little at night. So sometimes these things turn around. If you go look at ETFs, you find out that here's SPY, and SPY, it changes the price action. Sometimes it's price action is happening overnight. Sometimes the price action is happening during the daytime. So just to give you an idea, for me, it was very useful to see, you know, I was trying to decide if I wanted to hold stocks overnight or not. And after looking at this very simple indicator, which is just basically a custom indicator. I didn't do anything special there. I basically just, I actually did. So I actually had some, no, it's just a simple indicator. Don't worry about it. I actually did it originally. I did it with custom indicators, and I ended up coding it up so that I can get different colors and stuff like that on the screen. But this basically just shows you the color code here. It's just night, day plus night is green, day only is white, night only is gray. And we can go look at these things, like ARC was one of the ones we were looking at before, and you find out that almost all of the gains in ARC were during the daytime. Very, very, very little happened at nighttime at all. Actually, it dipped at night and it went up during the daytime. So I thought that was fascinating. So we can go back and look at this a little bit later if people have some interest in this. I just found it a useful tool to tell me whether I am looking at the right thing. Should I be looking at stocks overnight, or should I be looking at them and trading them only during the day? I was trying to do day trading, and if the stock price moves, most of the movement is happening at night. It doesn't make much sense to try to day trade that stock. All right, so the next one on my list here is Larry Williams %R. Okay, I'm gonna build this up a little bit, and it's gonna get complicated really quickly. So everybody knows about support and resistance. Well, Larry Williams has a thing he calls circle bar, and circle bars are basically support and resistance at various levels. So you can have a level 0, level 1, level 2, level 3. And this is just showing the same level. This is level 1. So you can see support is down here. It moves up, it moves up, it moves up, it moves up, it moves up. Well,
can I make a quick request here?
Yeah.
About a third of the screen is taken up by people's videos. You and Gene and Scott and Bob Y. If you could, guys, if you could turn off your videos, we could see more of the chart.
You should be able to change it by looking at the view, and you should be able to say full screen, and that should go away. Did that help, Steve, or not? I could turn off my video too here if that.
Yeah, they were all gone except yours.
Okay.
Yours is the only video left.
Should I turn that off though to make it easier for you or not?
We don't need to see you talking.
Okay.
We know what you look like.
All right. Okay,
There,
is that better?
beautiful.
Is that better, Steve?
Yeah.
So yeah, so you should be able to show it on the full
better.
screen, but okay, we'll go with this. All right. So so this is basically TQQQ, and you can see the resistance, and down below here is support. When it breaks down through support, what it does on this indicator that I wrote, I call it K%R, Larry Williams, and it's based on looking at the entire range of trading. So it's going from support to resistance, and it just splits this up into Here's the 20th percentile, the 80th percentile, and that's what you see down here is this is the 80th percentile and the 20th percentile. When it changes from a green to yellow, that is a new low. And every time it hits a new low, it produces a new yellow or a new additional yellow. When it goes above the previous high, the resistance, then it goes to cyan. So my thinking was that, you know, all we need to do is just basically be able to trade this. And just when it breaks out above this 80 percentile, you just start going long. And I thought this was pretty useful. It's one of the things I like about it is that the setup is delayed because you don't know where, well, support and resistance happened a while back, and the action happens on the bar. Unlike with the stochastic, I'll show you the stochastic here in a second. The stochastic is actually a lagging indicator. So it actually looks at the previous, in this case, 15 bars. It says, okay, look 15 bars back and make a computation, and you do something here. And it's really hard to get to the exact bottom. Whereas with Larry Williams percent R, it's looking at each individual bar. So you could indeed pick off the bottom. I was actually setting a threshold here as 80. So I just thought that was a unique indicator. But again, it's taking Larry Williams percent R and applying it to his circle bar day, or circle bar, is what he calls it. I'm going to turn off the stochastic here for briefly, and I'm going to start adding in. So this one is a 1. This is the 1 in the hierarchy. And I'm going to add in another one, which is a 0. So this is going to happen even faster. So you see a lot of these ups and downs, these squiggles, right? So when you get a small pullback, like right here, this is a small pullback, you could actually use this as another entry here. And in many, let's see here, that's not a good one to show you. So for example, these things in here. So say you're in a trend and you want to be able to get into a position. Well, if you look at this, it's like, yeah, is that really a breakout or not? With this level 0, you can actually use this as another entry. So you actually had a new low and it popped up above the 20 percentile. So you could actually use this as another trigger for entry, Whereas the level 1 didn't actually go low enough to actually cause a trigger for entry. And you can keep on adding these things to this. I can go to level 3 here. And that I think is the end one, last one, I think. Here. 3 should be a 4 in there too. Nope, that's it. So if you see all of them below the line, if you see a level 0, 1, and 3, there should be a 2 in there as well. Let me get a 2 in there. Should be a 2. There you go. So if you see a trigger on level 1, 2, 3, 0, 1, 2, and 3, that's a really good indication that you want to buy. That's a major buy point for me. And it's almost coincident with the stochastic. The stochastic is coming down here. It's got a nice buy signal, but the stochastic, I was getting frustrated that, you know, Steve's got some really good signals where he's in pretty regularly, pretty quickly. And even if he's in a trend, he can get in and get out. Well, I was getting frustrated that I'd get in with the stochastic or I'd miss it, and I didn't have another entry point for a long time, because with the stochastic I only get about 3 or 4 per year. somebody's microphone's on there. Okay. All right. So this is just a way for me to get better entry signals or more entry signals. So if I'm trying to actually incorporate this into some other software, which I will get into shortly. Okay. Let me, okay. All right. So that's basically %R. I'm not going to go into a lot of the details on it. If somebody wants the code is already up on the website, Ken.Excess Profits, and you go down to TradeStation code, you can pick it up.
Ken, did you make a strategy out of this?
So that's what I'm going to get to. After the Holy Grail, you'll see what I've done for that.
Oh, great.
Yeah. So that's exactly what I was planning on going for. But one of the things I'm finding is that, yeah, you've got a nice entry signals, but when it's going down, you also have entry signals. See this thing coming down? The price is coming down, price action is coming down, and you get these little entry signals there. It's like, wait a minute, I don't want that to happen, right? I'd like not to have an entry. This is not a bad entry. So if you look at level 2 and 3, you got a nice entry. This one here didn't quite touch down, so you didn't get a really, really clean entry. Here's a very, very nice entry, but it only happened in April of all of last year. For almost a year and a half, you wait until you finally get an entry, and that was a really, really good, solid entry. So yeah, so I'm going to talk about that, incorporating this into strategy here coming up. But before I do that, let me go and show you. So what I wanted to do is I wanted to find stocks that were moving and trending upward, right? If I could find stocks that were trending upward, I said, man, that's really, really, really be great. Well, there's another group in the San Diego area, is Rancho Bernardo. That's what I call them. And they have several guys that are saying, well, what you really want to do is you really want to find out what the gain is over divided by the drawdown. So what I did is I created an indicator here. It's called K% gain drawdown and the gain to drawdown ratio. So let me put it up here with SPY, for example. SPY is not a good one. SPY is not a good one because the money flow is flowing out of it, and I'm expecting SPY to start tanking here. So I'm not going to use that right away. Actually, for the long haul, it's not too bad. Here you go. Here's this bottom one's not too bad. Not that one. Hold on. Not that one either. This one here. No, that's not it. Okay. All right. So this is SPY. If you would enter somewhere around April, the question is, how bad is it if you would just go long in a stock and you just buy and hold it? So the gain is really nice, right? So the gain is up 55%, really nice. But there is a drawdown associated with it, and the drawdown is about 10.9%. So if you take 10.9%, if you take the gain divided by the drawdown, you end up with this other figure of merit, and that turns out to be about 5.13. So anything that's like 4 or above, that's pretty good. A lot of times you end up with something that's around 2 or 3 or even less than that, and those are ones you really don't want to deal with. Here is, so what I did is I tried to say, well, you know, once in a while I see a trend, and I said, well, if I could buy into a trend, how good is it? How good is the trend? I want to find a trend that's very, very tight. something that is moving up, that's moving up at a rate so that if I just bought and held, that the drawdowns wouldn't be very good. So what I did is I put it into an indicator. Oh, there it is. Here are stocks. And I have this indicator which has a result. So if you look at Alcoa Aluminum, for example, well, that's got a very nice result. That says that over the last, and I actually have a number of days on this thing. I think it's like 5 days. Hold on a second. Let me see what that is here. We'll go quick. I gotta see. Oh no, it's from August of February 1st. So from February 1st till now, Alcoa Aluminum is doing really, really nice. So the drawdown in Alcoa Aluminum is very small compared to the gain that it's had. And you can see that here. It's a pretty nicely behaved equity. And what I could do is I could go into TradeStation. I could actually click on this result here, and I can sort it, and I can find out the best ones in this list since February. And lo and behold, the top of the list is Mo. That's smoking. It's basically Altria. So this is the best out of all the stocks that I track in this list. This is the best stock. And if you look at it, it doesn't deviate very much. It has little tiny pullbacks, but not much. So as long as the stock is moving upwards to the right, this is a really nice way of finding a stellar stock to invest in, at least for the short term. And then you could put a very tight stop underneath it. And here's Alcoa Aluminum is another good one. And then you have Goldman Sachs. And then you start breaking below 4. Actually, Goldman Sachs starts breaking below 4. So it just gives you an idea of how to find stocks that are trending nicely and nice and tight. So for me, in order for a stock to trend nice and tight, that says that the big guys are actually buying in, and they've been buying in to Altria for several months now. And if you look at the dividend on it, you're talking about a dividend rate of about 7%, 6.5%, 7%. So somebody is into dividends, that might be a good one to pick up. So, all right. So that is my percent gain drawdown scanner. I don't know if anybody has any bizarro. Once again, if you go to Ken.XS Profits, you can download that code and you can actually put it on your TradeStation and do all the fun stuff with it. I find it's useful. You can actually start it at a particular date. You see something that you want to try and say, hey, is this thing a pretty decent stock at this date and time? You put it on to, in my case, I put it on all the different stocks here by using the radar screen. So I've also tried to find ways of getting in and out of stocks. Get in them fast and get out of them fast. So I don't know how many people have ever seen this parabolic indicator. It's a pretty cool indicator. The yellow is the parabolic indicator, and you can find this on TradeStation. You can find it on Thinkorswim platform, and it's really cool that when you have a parabolic effect, when you have something that's going down really fast or going up really fast, it's a really nice indicator. And then what I ended up doing is I made it into a strategy to trade. So you could see the results of the strategy here. This is the profit and loss along the way, and this is going long only. And Rolf always comes back and says, "Well, if you do it for long only, why not doing it for short?" And so I did it for short as well. So this is the same equity going long and short using this parabolic strategy. And initially I looked at it like, wow, that was really great. Look at that. You go on the short side and it's going down. This is wonderful. But every time I've tried to run something with on the short side and the long side, I end up with, this thing started with $100,000 and you're down to $70,000. And I have not been able to get a viable long short strategy that switches just between one and the other yet. Whereas if you went long only, this is the same strategy. So this one here on the bottom, this one here on the top is running on daily bars, the same strategy. The only thing different is that I turned off on this one, I turned off the short side. And it started with 100,000 and it's up to 200,000 right now. So for me, short is not what it's cut out to be. Ralph, if you have any ideas on how to do it short with a good positive expectancy, let me know. Or anybody else have any ideas? All right. So that's basically a parabolic stuff. And what's really fun is to see a stock that works exceedingly well on the parabolic, and that is Clean. If you run on Clean, ICLN, and go look at the strategy report, it's got a profit factor of 53.45. So that says for every dollar you lose, you're going to make $53. That's pretty good. And the percentage profitable is 87.5%. To me, that is a stellar kind of stock. And this particular strategy, this parabolic strategy, going long only, works extremely well. It keeps you out of this precipitous drop. So you're out nicely. And when it picks back up again, you're right back in. And if you look at iClean has been really doing extremely well. And once again, yeah.
Hi, this is Judith. Good morning.
Morning.
I had a question. Are you just doing long? Are you just picking up the stock or this ETF? You're not doing the options. This is just straight purchase.
This is just basically testing to see if I could use anything on this. So this one here, iClean, is actually I think it's a triple leveraged. So it's doing pretty good. Yeah. So in what is it? 2 years, almost 2 years here now. It's gone up almost 160%. So
that's great.
Yeah, you could actually do you could actually use it to trigger an option buy, because if you're looking at the strategy report and you see something that has a probability of success of 87%, that's pretty good. I mean, that's great for me for trading options.
Yeah.
So yeah, you could do it. That would be a great one to trade options on.
And these parabolic moves are you waiting for a huge parabolic move, or are you just doing it as it's showing shorter range parabolic moves? You're just waiting for that big move?
No. The parabolic, you're basically, if you look at the there's a bunch of, see all these little green things on the bottom here? Those are little profits. Anytime there's a green one, a red one here, a little tiny red one here, that's a loss. So so you've got little tiny losses and you've got some big gains. And then when it really starts kicking in there, you really got some great gains. So if you see a stock that you think is a good candidate for going to take off, this might be something that you might want to look at using the parabolic indicator. And I've seen it on both Thinkorswim and TradeStation. It's really kind of nice, and it gives you some nice entries, especially if you're in a when you're in a parabolic move. It's scary, right? You really don't want. Do you really want to enter a trade or not? It's got to wait for me. Well, you just wait 3 or 4 days, and you've got a nice little pullback, and the parabolic indicator will actually tell you when to get back in.
Okay, thanks.
Yeah. Okay. All right. So this one was a nice 87%. Well, years ago, I did, I think it was about 8 years ago, I did one which was called the Holy Grail. And let me stop sharing here just briefly here and give you a little, see if I can do this here. And I'm going to do my video here. So we have a bull market, we have a bear market. Right now, I don't know if you can see the little picture of me there. We have what we call a bunny market. They're just hopping up and down right now, right? And every strategy, almost every strategy, you get chopped up. You're just getting destroyed in this. So I kind of like the idea. This was Liz Ann Saunders came up with this. She said that, yeah, we're in a bunny market right now. And that's exactly what I'm seeing right now. So how do you make money in a bunny market? Well, I think you need to start thinking about doing something like the Holy Grail, which is basically when the market pulls back a little bit, you buy. When it goes up a little bit, you sell. Just keep on doing that over and over and over and over again. And so on my TradeStation excess profits in the TradeStation code, you'll see this strategy, and so you can download it. It has no parameters. It basically figures out on any time frame. You can go any time frame you want. You can go minutes, hours, days, weeks. It doesn't matter. It automatically adjusts. It automatically does all the calculations. It figures out what the optimal value is of your buys and sells are, and it just tries to just suck money out of the market. What is very cool about it to me is that if you look at the percent profitable, it's 100% profitable. So for people that don't like losing any money, this might be something that they are interested in using. There is a drawdown, and that is when you look at the pullbacks. So you can see these pullbacks. So when it keeps drawing down, you've got to keep on buying and buying more. So if the stock is like nail that goes upwards to the right, this is fine. This is not a problem. And it allows you to get multiple entries, and you can actually do some really nice trading. And here it's going from this is from March 10th to right now, March 12th. There was basically no motion, no movement. It's flat. And yet it basically sucked money out of the market. It just keeps on sucking it out. So I find that very useful. And then when we see that we have what they call a bunny market, why not take money out of the market? Just let it run. So that's what I'm trying to do. And now Rolf's question was, what about using this percent R, Larry Williams percent R, with his circle bar day? And that's what I'm trying to work on here. On the bottom, you see optimal times to buy. So when this bar is below this green line, that's an optimal time to buy. So you should actually say, okay, I'm going to buy there, right? And you look up on the top and it's like, this is the perfect time to buy. And then you wait till you sell to get above the line. And if it's above the line, then you sell. So it's a nicer, more market-oriented a way of optimizing the trades. So the Holy Grail basically does a computation when it starts up, and it says, okay, what's an average true range? It says, okay, so many average true ranges down, I'm going to buy. Average true ranges up, I'm going to sell. And so it just sits there, just sucks money, just buy, sells, buy, sells, buy, sells out of the market. I like the idea, but I would like to make it even smarter, and that is using the this Larry Williams thing here. And so that is what I am working on right now. And so I have one here, which I am trying to do that with. And so this is exactly what this thing tries to do. It says, okay, go in there and buy. Here's a buy, and it waits all the way up to here. They'll actually do a sell, buy, sell, buy, sell, buy, sell. And it kind of makes money, but it's still not perfect yet. I really don't want it to start buying on the way down here. I want it to stay out. So I've got to work on that. So Rolf, if you got any ideas or suggestions or TradeStation, let me know, or anybody else have any. I can share the code with you. I didn't put this code on to the Ken.XS profits because it's still a work in progress. But the other ones I mentioned are indeed there. So anybody else, did people like the Holy Grail or not? Is that something that is appealing to people? I should have made a poll there. That would have been interesting. All right. So anybody got any questions here? Got hands, or I haven't taken a look at the chats. I haven't looked at the chats. Okay. All right. So Jennifer says, yeah.
Hey, Ken?
Yeah.
Hi, this is Michael. Just a curiosity question for you. Have you aligned around the best time frame for use of your Holy Grail system? I see 15, I see a 30-minute chart or bar.
Aligned in
What time frame bar works the best?
it just depends on your individual interest. I tend to be a swing trader.
Okay.
And if you are so inclined, you can go down to minute bars and just suck money out of the market. Now that we have basically zero cost commissions, this is fabulous. This is just wonderful to be able to just sit there and just suck it out. Before, every time I traded 100 shares, I'd have to pay a penny a share, right? So I actually had originally in the Holy Grail, I actually said, okay, your commissions are so much, you have to make at least 10 times the commission on a sale as one of my conditions. Now it's zero. So it works really, really nice. I've tried it down to minute bars, and it seems to work really, really well. No problems. The only issue that I have is if you have a solid connection to TradeStation through the internet, something that will be around forever, doesn't go down at all, it works beautifully. If it doesn't, if you have intermittent, and I live in a manufactured home community, and we were having problems every 2 months where the network would go down for several hours in the middle of the day, and it just wreaked havoc with this. Once it loses sync with the market, it forgets where it is. It doesn't know that, oh, 2 hours ago, I actually made this purchase. When you start it back up, it just forgets all of that. So I've been working with some other people to, we've actually got a piece of code that will actually figure out what the previous buys were and sells, and it actually reads all that back in and restarts it all again. And it's okay. I haven't used it extensively because we've been in such a bull market, but in this bunny market, I am starting to reuse that, starting to get that back in place. That answer your question, Michael?
Yeah, I mean, to some degree. I mean, it's just like anything. It depends on the symbol and the time frame. So I was just trying to get a sense of what time frames you've tested and if
Yeah,
50 is
so
the right
what I
one or
what I
whatever. But
what I typically like to do is I like to trade it on something that has the greatest leverage, right? Because I want the biggest bang for my buck,
Mhm.
and my time. So the higher the leverage, the better off it is. Some of these stocks, like well, uh, SPY, for example. Yeah, SPY has tremendous liquidity, but it doesn't get very many trades. I mean, it doesn't move much, right? And what you really want to see is you want something that really moves a lot. And
Sure.
the more it moves, the better off you are. And this same strategy will work on options, futures, anything. And so what's really cool about the options is that every one of the orders is a limit order. So if you want to take and run it on uh, options expiring that day, it works. If you want to trade it on options that expire in a year. Michael, what kind of trading do you do? Do you tend to do short-term trading, long-term trading, or investing?
I would call myself a swing trader.
And what's the period of time that you swing?
I am typically looking at 1 hour or 4 hour bars.
1 hour, 4 hour bars. Okay,
Yep.
so I could change this real quickly to 1 hour bars here, and there you see 1 hour bars. So it works great on, like I said, any kind of bars. I got this thing started out this uh, I the Holy Grail is designed to be parameterless. Well, sometimes I just want to start it up at a particular time frame just to see when what the price action will look like there. I could actually start this thing up from beginning of time here, and I'll just put on the standard Holy Grail, and it just, ooh, that one didn't. So it waits 50 bars there before it starts trading. Let me go back, put more bars on there. 30 days, I want to go 100 days. So this goes back 100 days, and it'll just sit there and just trade. So it just depends on your style. You know, if you're a swing trader, this and you like to do hour bars, this works great. And like I said, in a bunny market, something that's hopping up and down, this is definitely something that you can use. Michael, do you use TradeStation or Thinkorswim?
I use both actually.
Okay. All
Yep.
right. So yeah. So try to download the code on from Ken.XS Profits in the code section, and give it a try. See what works for you. If it does, and you can actually, if you are a programmer, you can go in there and modify it however you like. And I basically coded it up so that the things I typically would use as inputs, I just moved them into variables, and I set the variables at a certain value that I found traditionally has been very fruitful for me. You know, this using every time it goes down 2 ATRs, I buy. Every time it goes up 4 ATRs, I sell, and it just sit there and just does that over and over and over and over again. But especially if you've got something that's working, that's kind of like a good stock as is. If a stock is going to zero, don't do it. And that's one of the problems with options. Options can indeed go to zero. So just be aware that you need something that has some longevity to it, that's going to be around a long time. And you won't see very many. So this is actually a dip in the P&L. So you can actually see a little dip in the P&L there, that white thing there. But every time it trades, it produces a, what is it? So this actually produced $846 every trade. That was its profits target. So it's kind of nice. Any other questions, comments?
Ken,
Yes.
hi, it's Peter Elson. As a complete beginner to TradeStation, I've got some experience with Think or Swim. With TOS, you can, whatever strategy you put on, it goes to TOS's server and it sits there and it executes as and when it thinks it needs to. Am I right in thinking with TradeStation that the opposite occurs? It has to be on your workstation to be able to execute?
Yeah. Yeah.
Okay.
Typically, yeah. And so what some of the people have done is they have put it on a server on the internet. And so the server on the internet is running 24/7, and they'll execute it through the server remotely to their computer. And then the other one is I have another strategy that is implemented in object-oriented easy language, and that actually posts the orders to the trading floor. So even if you lose connection, the trades are still there. So you're guaranteed to get a trade. So various levels of robustness there.
Okay. All right. Thank you.
Okay, sure. Any other questions? Okay. All right. So one of the things that I've been doing, we did last few times, is we had a bunch of people chime in at the end, and they said, hey, what about this stock? What about that stock? Hey, take a look at this one. Oh, I think it's a good one, good pick or whatever. So what I've been trying to do now is I'm trying to log those to see, what's making sense and what's not making sense. So we met on the 20th last time of February. And so this is starting in February. So this is this curve here. Let's see if I'll expand that out a little bit here. So this curve here in the bottom says, okay, if you started, one of the questions I asked is, what do you do on Monday? And so people started chiming in with, hey, what about this stock? What about that stock? So what we can do is we can just go traipsing down through these things and actually quickly see, how did we do this past month? So here's Goldman Sachs. And Goldman Sachs basically has been flat for the month. If you would have used maybe the stochastic, you would have been able to maybe enter here. And this shows at the end is who made this suggestion here is Karen P. I don't know if there's, Karen, are you here? I don't know how, so the key is, one thing is to say, this is a good stock, but what is your entry and what is your exit rules on each of these things? I think that's pretty important. So hopefully this time, what we can do is if people make some recommendations that they can say, okay, this is a good stock. Well, okay, here is my entry, or I would enter right now. Judith was saying a few times in the past that she just basically finds something that's really, really good, and she just hops on and rides the thing, which is one way to do it. So if you can get some credibility in the pointers that you have, more power to you. So this is Goldman Sachs. It had since the beginning of last month, it had a 46% drawdown if you would have bought and held it there. But hopefully you were using the stochastic or something else, or to actually look for a turning point and entered there, at which point it would have been a better deal. So here's Goldman Sachs. If you would have entered somewhere near that bottom, you would have been up 27%, which would have been a good deal. Let's see here. Is this too much data for people? Steve, Alexander, anybody? So there's two different charts here. These are both 30-minute charts. And this one here starts when we had this little pullback. And this is actually where I entered the market with a a stochastic buy. So on my TQQQ and SPXL, I started scaling into a position, and I made some money, and I actually got out already. But if somebody has a problem with this, let me know. If they can see it, great. And since it's charts, hopefully people can see this. Okay, so that was Goldman Sachs. Evo Them. So here is another one which dropped 57%, but it hasn't really had a
see it, okay. And, but it's all minute charts.
Say that again, Steve. You can see it. Can you see the chart? Not necessarily the. Let me see if I can make this even bigger.
I said I can see the charts.
Just
The charts are fine. No, they're all readable. The problem is they're all 30 minutes, 15 minutes. I don't trade minute charts, so they're no interest to me.
Okay.
But that's just me. See,
Yeah,
people
yeah.
like minute charts, then
So-
fine. They're clear.
So when you're trading, what do you trade there, Steve? Day bars? Steve.
Yes, always day bars. And I see on your list on the right there a bunch of things with, I think that's my name over there. And those are stocks I never heard of. So I didn't do that.
No, this isn't your. This isn't your Alec. This is
You got
another Alex.
R&D, FSKR. Oh, okay, good. I'm okay then.
Yeah, you're Steve. You're Steve
You
A.
see one on there.
Here's Steve A here. UAA.
Okay, that one, UAA.
So
got it.
here's Steve UAA. Money is flowing out, and the drawdown is only 9.5%. So, but it's
That's not-
basically been going sideways.
That chart you're pointing to is not UAA. That's EVFM, it looks like.
No. So this one here is
There.
UAA.
Not UAA.
Yeah, this is UAA. Yeah. So I just scrolled down to the bottom there to the one that you did. You had an entry on 315, which was entering Under Armour, right?
Yes.
Yeah, and then that's what I put on there. So I
Under Armour.
basically have a date. So it's Steve A, date 315, Under Armour. So I'm just trying to figure out some way to track this to see what's working, what's not working, get an idea of the styles of different people.
Mhm.
I will trade, down to minute bars and out to daily bars. So I span a bit of a range here. So that EVFM, that was definitely something that hasn't performed very well. Here is PLTR, which was doing extremely well, but over the last month, it's actually gone down 33%. And I don't see any kind of a uptick, and especially since the money flow is still going down, this is still heading downward. This one is Catherine's IZRLHB. It's been going down since that's at the previous meeting, but and it's gone down 21% overall. But then again, if you would actually pick up the stock based on stochastic, you would have probably come in on this one, and you had been up about 4%. So for me, triggering on a stochastic tends to work more often than not. Stochastic, like Steve says, on the daily bars. So if I look at my daily bars here, here's daily bars, here's the stochastic. There's the stochastic. It came in and it said basically buy. So this was my buy here on TQQQ. So I bought here, and it said to not to get out yet, but I ended up getting out because this market, after seeing the hip hopping around, I just said, nah, this is not a good market to trade this. If there was some sort of a decent trend in it, I could see it, but we're not seeing it right now. All right, so, and then here is Alex. Alex, these are things that were from the chat window the previous time. And so Alex suggested this one. I don't exactly know. So I should have asked at that time, I should have asked why you say something like that? Why would you post something like that or suggest something like that? And what is your trigger to get in? You know, and so there was a bunch of them that was in the chat. So these are just various ones. Money is flowing out of them ever since then. The drawdown is 42%. So these things were just not timed very well to be in these positions here. So I'm just clicking down through them. This one actually has money is flowing into it. And since the date that we were there was indeed a 9% gain on it. RMO, money is flowing out, still going down. It's not doing real well. And then this one here is another one. Money is flowing out. So anytime money is flowing out of something, I'm just really leery of. It's just not a good thing to get into. Here's another one. And then here is Kevin G. I don't know what Kevin decided to try to suggest that one. Money is flowing out. There's no signal. It's on a downward slope. I didn't see anything there. Richard R suggested XRT, the retail ETF, and that's had money flowing kind of flat, but it's starting to flow in, and it's up almost 15% from the last meeting. And but there's this cyan thing here. This is the quality, and it's got a quality number. This ratio of gain to drawdown of 1.54. To me, it's not the best in the world. I think we could do better than that. And PLTK, this one money is flowing out. It was flat, but then money started flowing out. Trend tends to go down. There's Steve, the one I was just mentioning, the Under Armour. Money was flowing in really great, and then it dropped. So we have a gain, a slight gain, but I don't know. I haven't looked at it relative to the 15th here. Looks like it's basically flat since the 15th.
Ken, can you hear?
Yeah.
There's quite a lag here between when you click on the radar screen and when the chart actually shows up on the left side. And it's sometimes you'll talk about PSTH, but the chart's actually US or UAA or vice versa. So I don't know what you can do about that. Maybe give it a little time or use different bars or something or other, but
okay.
They're not synchronized.
They're not
You're
instantaneous.
behind by 34.
How much? What's the delay?
It varies anywhere from 5 seconds to 30 seconds.
Whoa. Wow. Okay. All right.
I see from the chat, other people are saying they're not noticing any delay at all, but there certainly is mine. For example, click on RIDE. All right, I don't see any chart for RIDE. Still don't see it. Still don't see it.
No. Okay, now I just saw. Okay, I just clicked on it.
Okay, I see UAA. That's what I see in the chart.
Really?
Still there. Still there. Still UAA.
Steve, the rest of us see ride.
I see ride.
Yeah.
Okay, there it is.
I see
Now,
ride,
finally,
too.
I got one.
I saw
Yeah.
ride right away.
It might be
saw
your
it right
internet
away.
speed, Steve.
Wow. So your internet connection is really slow.
Yeah, I don't know why it is, but it's maddening because you click on a chart and you talk about the chart,
Yeah.
but then the chart doesn't show up for a few seconds. It's not, it's not like forever, but it's very slow.
Yeah. Okay. I will try to remember to slow that down a little bit. Okay. It's a whole full screen. Okay. Let me try this. So XRT, I just clicked on XRT. Tell me when you see it, Steve.
Right now. Yes, so
Okay,
it
so
took
it's
it
about 3 or 4
4
seconds. It's about
Yeah.
3 or 4 seconds.
Click on
Here.
something else. Click on something else and I'll tell you again.
Okay, TNA.
No.
No, got it. That
Okay,
was like maybe
so
2
about 3
seconds.
seconds. So probably about 3 seconds in there. Interesting. All right. Okay, sorry people, for those people that have are getting it a little slower than I expected. I'm seeing things instantaneous, of course, from my side, and I'll have to talk with Michelle, who's in the other room, and see. She's got a Chromebook, and see how fast the Chromebook updates. But we'll check that out. That's good to know, Steve. Thanks for pointing that out.
It also might make a difference to what the stock is and whether you're showing a 30-minute chart or a daily chart. If you do a daily chart, it's virtually instant every time. But the 30-minute chart, sometimes if you haven't been using that one in the last few minutes, it'll take it a few seconds to load the data.
Yeah, there's more information on the 30-minute chart.
Yeah, I believe that's what's slowing it down. Because I have a good connection. Everything's clear and everything's working fine. It's just that when you click on certain charts, the 30-minute
I'm going to have to try. One of the things I could do as well is I'm going to try to look and see what it shows on the videos when I record. When I stop this video, I'll take a look at the video and see how the delay is. Thanks very much for pointing that out. I'll pay particular notice to that.
One other suggestion, Ken, on that 30-minute chart, right click on that and change it. Go back like only, I don't know, 6 months or something like that. You've probably got it set to about a year. And it takes a long time to load 30-minute bars for a year.
Yeah, it's only 45 days.
Okay, if it's 45 days, it should be all right then.
Should be good, yeah. Yeah, I only need, I need about 45 days there. Yeah, there's not much other data. There's not much data there beyond the edge of the chart there. So, okay. All right, good. All right, thanks. Good pointers. Thanks, guys. All right, so we were on TNA, which I didn't trade, and I should have traded. I'm kicking myself. I didn't trade it because it actually, in this, when I had my other signals on the TNA or TQQQ and SPXL, I did not trade TNA, and that was a stellar performer. It actually went up over 14, almost 15% in about 5-6 days. But I didn't get a signal on my stochastic, so I don't trade it. My rules are pretty well down, and I stick to those things pretty much most of the time. It's rare that I don't, and usually when I don't, that's when I usually lose money. So here's TQQQ, and so Gary last time mentioned that, and I think it was Gary, which Gary? Oh, I can't remember which Gary it was. I got to put down a Gary W or Gary M or something like that. I think it was Gary Whitlock that said it last time. He suggested TQQQ, and so did I. But for me, it was based on the stochastic. And so I actually entered on the 8th of March, and that's about here. So you can see where I entered it. And yeah, I got it up to over 10%, but now it's down around 3.5%. So I got out when it started pulling back. I started getting out, but because it broke through my adaptive moving average, so I just said, now I can get out. And for me, I can get out and get back in pretty easily, and I can put basically a price point, and if it goes back above that price point, I go long. If I go back below it, I just stop out. So it has a very low cost of entry there for me. And then SPXL, that's another one that I traded, and I based it on the stochastic. All right, so what I can do here is if some people have, let me enter another, if anybody has any others that we should look at or suggestions, please let me know either in the chat window. Okay, so I see Scott's got a few of them here. So I will enter those here right away. And also you can see the phonetic alphabet to your left here. If you guys want to say it, tell me verbally, please try to stick with the phonetic alphabet. It helps a lot in understanding the symbols. So D, U, R, I, K, A, N, N, C, A, C. So Scott, on those signals that you sent me, the symbols you sent me, what do you use to enter, or you just enter them at will? Scott, where are you, Scott? Scott, turn on your microphone. Turn on the mic, Scott.
How about now? Can you hear me now?
Yeah, great.
Okay, I guess I had the wrong microphone selected.
So you had these other signals here, deer, URI. Do you have any particular entry triggers?
So some of these are based on just 90-day relative strength. And then within what I do, and then with it's kind of a top-down approach. So then within that, those strong ones, I look for, you know, shorter term signals like pullbacks, breakouts, congestion, just kind of depending on how badly I want to get into it or how patient I want to be with it.
So are you looking at it on any particular time interval when you enter these positions?
Usually daily bars.
Really?
Yeah.
So you just go in at the open when it says okay?
Yeah. Yeah. Open the next open.
Yeah. So deer is doing pretty well, or was doing exceedingly well here until the 18th. I don't know what happened on the 18th, but that was the drawdown was very small, and the gains were really nice. So what are you using to qualify that?
So deer is just one I've kind of kept my eye on. It's an industrial. You know, industrial is a leading sector right now. Industrials, materials, energy. So those are in the 90-day window. Those have been the stronger sectors. And so then I drill down into the sectors and I kind of pick the stocks I like. Okay. And deer is one of them. The other ones, the Kirk, the Navios, and Viacom. Those just come up on scans for 90-day strength.
Scott, I have a question for you. This is Judith. How are you?
Very good. How are you doing?
Good. I'm also in a few industrials, and I'm just trying to see how do you think, how long of a projection are you giving these? Because many of them, like deer, just hasn't stopped going up. And I've been shading some profits, but I'm thinking how much life is in this industrial move. I know Biden has already given some message about infrastructure being a priority for his administration. So what's your opinion about how long these industrials will run?
Yeah, I don't know how long they'll run, but it's just, you know, momentum, just like in physics. Things in motion tend to stay in motion. And but not always. Eventually they do stop and turn around. So I'm just kind of following them where the momentum is. I could share my screen for a little bit if you want me to show you where I find these.
Yeah.
Sure, thank you.
Let me stop sharing mine. Okay, Scott, take it.
All right, let's see here. Screen one. Sure. So one place you can do this for free is on FinViz. And if you go to groups, So on the groups tab here, which says groups, click that. And you can see, I like the 90-day because I use daily bars. If you trade hourly or 30-minute bars, you can maybe do a 1 month or even a weekly performance. I like this 90-day. It's a 3 month here. So you can see within the last 3 months, make it a little bigger. The energy's been leading. So you can actually click on the sector or just the bar, and it'll show you, it'll list you all the stocks, it'll show you the different charts in alphabetical order. And energy has a lot, you know, there's 25 pages of, you know, there's a lot of stocks there. So if sector there's a lot of stocks per sector to go through. So if you want to narrow it down more, you can do it by industry group. So if you go back up to here to groups, and then in your group, you select industry. And this says 1 day performance, 1 week performance, 1 month performance, and 3 month relative performance. So you can see the marine shipping industry has been the leading industry. So you can click on that and you can get, you know, 10, looks like there's 3 screens. I think there's 10 per screen. Let's see, 2, 4, 6, 8, 10, 12. So you can look at that way. Another one I have is I use bar chart. That's where I got some of these I listed here. They have I think it's under screener. I have a free account, but let's see, stocks, sectors, industry rank. Let's see. Let's go to stock market sectors.
That guy looks like a criminal on America's Most Wanted.
Hopefully you're not talking about me.
The guy on the webpage.
Yeah. That was okay. So I go to industry. So on the left here, there's all these options. And I go to under the sectors group here. Go to industry rankings. Oh, shoot, I did it again. Sorry, I clicked on it again. Hold on a sec. And there's this one called just top 100 stocks. And I'm not sure. I think those are all top stocks across all sectors. I'm not sure what that is. I just kind of discovered this morning. And it'll show you the top 100 stocks of the last, I think you can set, so this is the week or 1 year period. Anyway, so that's where Kirkland, that's where these came from. Kirkland, Navios. I think the other one I mentioned was Viacom. So I need to look into this a little bit more, but anyway, that's where those came from.
Got it. Cool.
Yeah.
Very cool. Yeah, I have a look at FinViz from that standpoint. That's a good way to utilize FinViz.
Yeah, and a lot of these, like, you know, department stores, if you really want to trade department stores, for some reason they're really outperforming, you know, like Kohl's, Macy's, Nordstrom. I don't know what these other two are. Companhia Brasileira, Arco, Dillard's. So
Got it.
pretty sure there are more, I'm sure there are more store stocks out there than these 6, but I mean, this is one of the ones that came up.
Okay. Very cool. You ever run into problems with the liquidity in those things?
Yeah, see, I would be very selective. You know, like some of those I haven't heard of, I wouldn't touch because there's probably not enough liquidity. You know, I don't know. I haven't heard a lot of these, like in the shipping. I haven't heard a lot of these. I think I've heard of Castor. Diana Shipping I've heard of.
Yeah.
I don't know that one. So, yeah, you definitely want to check out the liquidity on them. Or just use an ETF.
Yeah. Yeah, that's why I thought the XRT was pretty good for that kind of a thing. It basically picks them all up.
Yeah.
So, okay. Thanks, Scott.
Mhm.
Any other comments, suggestions, questions? Or let's see if there are any other.
I've got a couple of comments. If I could share my screen.
Sure.
And I have to bring up TradeStation. I had it up earlier and then I dropped it. It'll take a couple of seconds. More like 10 seconds. I wanted to show you the stocks I'm looking at and why I don't want to trade them or do want to trade them. I just think it might be useful to pretty much anyone. Okay, it's getting there, almost. One more. Okay, so every morning I do basically, Ken, the same thing you do. I look at a radar screen, looks like this, and I look at the general markets, the retailers, et cetera, et cetera. I've got some lists in there. And same as you, I click on anything I want. Whatever I click on, the chart comes up. And so that gives me a rough idea of how the market is doing. SPY is always up there. And then the things after that, just generally I get some mornings, every one of these is green. And some mornings, every one of them is red. And that gives me a clue, you know, if you wake up and everything's red, it kind of gives you a little bit of jaundice toward what's about to happen that day. These are 4 stocks that I look at every day. I've been following them for quite a while now. And by quite a while, I mean maybe a few months. So for example, UA was one that I was trading. That's Under Armour. And my favorite indicator is this one. The regression channel. And I like to go back to, well, maybe the 1st of the year or maybe the 1st of February. But right now, this is obvious to me that this is a period that the market is going through. Like you said, the bunny market thing. Up, down, up, down, up, down, up, down. It's not really going anywhere. It's slightly going up, but not enough to pay attention to. During this time, I've had 1, 2, 3, 4 buys on UA. The white bars mean buy the next day. So I've had 4 since February. And that's actually pretty strong because every trade almost is a win. So it makes money that way. Then I go over to the next one and I say, okay, well, let's look at what we've got over here. Oh, we've got Ford. Nice, easy stock, no questions about it. You know who the company is. And then I'll go back here to February and take it out there. And sure enough, it's doing about the same thing, kind of basically going up. And we've had 1, 2, 3 buys in Ford since February. That's not a lot of trading. Some of them have a lot more trading than that. And so as an example, SPXL, that's one of my favorites. And looking at that one, let's go back, we'll go all the way back to January. And basically going up, and there have been 1, 2, 3, 4, 5, 6, 7, 8 trades in SPXL. So that one's okay too. It's reasonable, it's going up, it's not going to lose a lot of money probably. So that one I'm okay with. I'm not ready to buy that on Monday because as you see, there's no white bar today or on Friday, last Friday.
But are those trades profitable, Steve, or not?
Most of them are. Occasionally I do have a loss, but generally most of those are profitable. I'll show you.
I usually run that little thing on my chart, which is underscore profit loss. And it basically shows me every trade, whether you can see red bars or green bars. So it's just a nice, simple way of logging them along the way. Otherwise, you got to go to the strategy to see how it worked and stuff. So
I like the indicator you have, but I can just see it here on the chart. And besides, I also just keep a spreadsheet that's got every trade and, you know, when it was bought, when it was sold, and how much money was made or lost. So Ford, not a lot of trades. There's only been 3 trades. in the last, since February. So there's no buy signal there. There's no buy signal here. So for the question what to do on Monday, none of my things that I'm watching say to buy on Monday. So there's no buys on Monday for me. One more thing I watch is called ICLN, and there it is right there. ICLN, I'm a little interested in, and I am watching it because way back here, let me get this thing off the screen here. It started going down, and it's been going down. My volatility indicator with all this red right here says don't trade. So there have been no trades in here. However, just recently, last week, it went to the green. And that's telling me, okay, now if everything's okay, if you do get a signal, it's okay to trade it. But I haven't gotten the signal yet. So still, even ICLN, the answer is still no. So my take on it for Monday is there's nothing worth buying that I see in the ones that I'm watching. And I don't do a lot of scanning. I'm not really that interested in individual stocks. I think they're too risky. So that's my take for Monday and what's going on. And that's all I have to say about it, I think.
Cool, great, excellent.
Steve, I have a question. This is Judith.
Yeah.
You said you don't do individual stocks, but was that Under Armour, an individual stock that was for some reason not as risky to you?
Yes. It was because of the chart. It was just so steadily going up, looking nice. And it's not that I'm religiously against individual stocks. It's just that when I've got something else that's more interesting to watch, I'll go with the ETFs every time.
Yes.
So I did buy Under Armour and also Under Armour Class A in the last couple of months. It just looked like it was very strong. It looked stable. So what I'm really looking for is bullish, stable, steady, just steadily going up. If it has little pullbacks here and there, I like that because I know most people like to buy breakouts. I don't. I buy pullbacks. So I'm looking for something that's generally going up, but I want to see a pullback. That's
So,
one of the reasons.
I'm curious because you've been trading for like 45 years, right? So you've seen many cycles. And over the time, I think that's the riskiest thing is when we go toward individual stocks that we can make a lot of money while they're trending. And then when they get into these choppy territories or even downtrends, that's when, that's when the problems come. Uptrends, everyone's making money, we're all happy. So in your experience, when you've created just a smaller list of ETFs, have your returns been better? Is that how you were able to just focus on trading ETFs?
Well, I made well, let me show you this. Let me get my screen up again. I'll show you something. Okay. Here's 2019. All the trades open, closed, and from June 2019 till June 2020, 1 year, I made 141%, and I'm happy with that.
That's wonderful.
That's all the trades, winning, losing. Here's the profit out here in this column, and this is the number of days the trades were held. So I keep all this and I track all that. And here is 2020. So that first one was 2019 to 2020. Now this is live. This is real right now from June of 2020 until now. And as of now, it's up 161% since June. So it's not even an entire year yet. But so it looks like it's going to be even better than 2019. So I guess in answer, yes, it's very profitable. It keeps on going along. There are drawdowns, for example, there, they do happen. But bottom line, Looked like that, 161%, 46 grand profit on a $30,000 account. And here's the last few trades, UAA, UA, Ford, and they've all been profitable. There's all the last trades in February.
Now,
That's
Steve,
wonderful.
Steve, looks like most of those trades were ETFs, like what Judith is saying. So now it looks like you're deviating to individual stocks. Is there some sort of a change in modus operandi for you?
There's not a change. And yes, these are individual stocks. And there were some others as well. Up here here's a UA up in January. There's NAO, that was an ETF. But I'm not stuck on ETFs. It's just that the stocks, when I do a scan and find stocks that are pretty stable, they are going up. Sometimes I look at money flow. And when I find stocks like that, I like them. But if it's something that's, for example, gone up parabolically, or it's been down a lot and then up again, a bunny rabbit market, things like that, I just stay away from them. Whereas if it's something, all of these are just things that are basically stable. They're moving fairly slowly. You won't find anything on here that's, up 3% in one day and down 2% the next day and up 2% and down 2%. Typically, if they move 1% in a day, it's a lot. Mostly they don't. So I'm not so much against individual stocks as I'm against stocks that are too volatile. I really watch that volatility indicator, and if it's in the red, if it's too volatile, I'm just staying away. I don't care what it is. Does that answer the question?
Yes, thank you.
Okay.
And the volatility you're using on each individual stock, not necessarily like the VIX in general for the market. You're using each individual volatility in your indicator.
Yeah, it's just a little indicator that I wrote. It's very simple. You can have it. It's plotted on all those charts. It may be on Ken's website. I don't know. I think I sent it to you, didn't I, Ken?
Which one? The volatility? I haven't put it up there. The only ones I got on mine are the ones that I wrote.
Okay. Well, anyway, if anybody wants it, send me an email. I'll send it to you. It's a very simple little thing, but it's my own version of volatility. It has nothing to do with ATRs. It's just basically how big are the bars compared to the average bar size. And that's all it's looking at. So it's very, very simple, like everything I do. But it helps me. It shows me, how's the volatility doing? Like here.
Are you at all concerned about the general volatility in the market, like the certain level within the VIX that you may just not trade at all?
No, not interested at all, because if I'm trading ICLN right here, for example, there's the chart. Here's how it's been going. Here's the volatility right now. And all it's saying right now is that during the last, 2 or 3 weeks here, it was very volatile. And you can see it up here. I mean, you can actually look at this and tell with your eyes. You don't need the indicator, but I just wanted to make it obvious. But these bars in here during this time frame are just too big compared to the average bars. The average bars would be something going back about 30 days. In fact, that's what I compare it to. I look and see, hey, are these bigger than they've been the average of the last 30 days or not? And right here, all this red period right here is too volatile. It's something I don't want to personally trade. Now, take a look here. During the last 6 days, oh, it's turned green. That means these bars right in here for the last 6 days have been relatively small compared to the average of the last 30 days. That's telling me, oh, we don't have a bunch of volatility, a bunch of trading in and out and in and out.
Yeah, more stability.
So since it's settled down, that tells me, oh, okay, it's okay to trade now.
But one of the things that it doesn't show you, Steve, is yeah, the bar size is smaller, but if it's basically sideways, that's where you get the bunny hops back and forth.
Yeah, and I can see that on the chart. All I have to do, and I do this almost every day, I just look right here and I say, okay, what's going on? Oh, well, it's basically going down, so I wouldn't buy that. I mean, even out here, see, we've got these nice green bars, but the chart's going down. I'm not buying something that's going down because this is a buy only strategy.
Yeah.
You know, it's long only, so no, I don't care what happens, I'm not buying it. Even though these bars, these are just telling me the volatility's died down. Now, sometime probably in the next week, my guess, and this is just a guess because it hasn't happened yet, but my guess is this is going to turn around and head back up. I wouldn't be surprised at all if sometime next week I got a buy signal, even in the next 2 or 3 days. And look what I've got here. Looking at it on a kind of a bigger time frame, what we had is we had a nice stable rising market in ICLN, and then it turned around and we had a nice stable fall in ICLN. This is a pullback, and it's a pretty big pullback. You know, this is not a tiny pullback here, which means to me that when it does turn around and head up, now we've got the green already. We've had the pullback. We had a nice steady market. It's going to be time to buy this. So I'm very likely to be buying ICLN. Oh, I don't know, in the next 4 or 5 days, because that's what the market's telling me. You know, this is all over. So I'm
So
just
you're
going,
seeing that bull flag pattern, and you're waiting till the end of the day to evaluate it? You wait for the close to evaluate for entry
Yeah.
the next morning?
yeah, I always look
right?
at the markets at the close of the day. During the day, I don't care what it's doing. I'm not usually trading, but at the end of the day, on Monday, I will get a signal here. Maybe it may not give me a signal. It may still be, no, sorry, not time yet. But when my strategy says, okay, time to buy, then the following day I'll be buying. And I'll put out a trade recommendation and it'll say, okay, buy tomorrow. But as of yet, there's no buy signal. See, there's no white bars here, none. However, here, when the market was doing this, lots of buying. Buy. So that's my 2 cents worth.
Thank you.
Okay, you're
Very,
welcome.
very valuable 2 cents. Thank you.
Thank you.
You're welcome. Bye-bye.
Thanks. Well, let me give you an idea. Let me share my screen here.
Mhm.
See if I can, is Steve's gone now? So can you guys see my screen now?
Yes. We can see.
Okay, cool. All right. And so I have this thing I plot is the Jenkins cycle all the time. And this shows that 1.2 bars left remaining to this down cycle. So when this thing hits the top, we should see a either near-term bottom. We don't know. It's just something's going to change here. Continue it on and down, or it can go sideways, or like Steve says, it could pop up. If you look at the historic prices right here, you see that we've been, this is SPY. This is this year, since the beginning of the year. This cyan line is the beginning of this year. And we are approaching the price where, I mean, the time, which is March 23rd, where we historically see a rise in the market. So that is about Wednesday. So I got 2 different long-term seasonal indications that we're approaching a turning point, and it sort of backs up what Steve says is don't do anything on Monday and maybe wait until about Wednesday before you enter another position. And since this is SPY, this is basically most of the market. So I don't know if that adds any value to your thinking, people, but maybe. I got a whole bunch of other I see a whole bunch of other stocks that people were talking about in the chats. Hopefully people are watching the chats as well. So we had, somebody said, what about, Neil Harrington said, what about NQ, which is the same as QQQ. NQ is just the futures contract. Then basically it's going sideways. The money is flowing basically sideways. It was going down. I don't see anything stellar about the thing taking off here at all. So unless, Neil, you have anything more to say about that as to what you are looking at on NQ?
No, Ken, thank you. I was just interested in your thoughts about it compared to what you were saying about SPY, and sounds fairly similar.
Okay, all right. And then another person was saying Walmart, and Walmart, the money has actually been flowing out. The price action has been going down. To me, that says, you probably want to wait a while on it to see if you got any kind of uptick on it. I don't see anything that's positive in that regard. I don't know if anybody else, Cindy, do you have anything to say about Walmart? Is there some reason you would be picking something like that up? She had it in the comments. I didn't see it.
Yeah, I think it's been consolidating for a couple of weeks. And just on Friday, there was huge volume surge. And the L2 buy is triggered on Friday, yesterday. So I'm expecting it to go up at least next week.
Okay, so here's the volume, like you said on Friday. So it did indeed, I've got a little indicator here that shows when it goes above the 2 standard deviations above the typical volume. And you are indeed correct. We do see some additional volume there. And it also had volume prior to that. So in this downtrend, though, it's been seeing quite a bit of volume.
Do you think that the stimulus checks had anything to do with any of that?
Say it again.
Do you think the stimulus checks had anything to do with that?
Oh, good point. Good point. Good point, Catherine. I
doubt that.
What's that?
Yeah, I don't think that people who get stimulus checks buy a whole bunch of Walmart stock.
Not stock, but they do buy the product. So
correct. Correct. Dollar General is another one that they're anticipating, that a large bump is being anticipated because of those stimulus checks.
So it's DLR?
DG, I think it is. I've been watching it.
Yeah, I have no doubt that the stores will do more business, Walmart and Dollar General and others, but that doesn't translate to stock prices.
It's DG, Ken, Delta Gamma, Delta Golf.
Delta Golf, yeah.
Well, just look at what happened last year. I mean, just kind of, I don't know. Look at when the stimulus and action was taken by the Fed then, and I don't know. It should, I think it'll be a big boost, and I'm still a big bull here just in general. And I think the stimulus will only help, and I think the consolidation assessment is correct, and we'll be seeing more upward movement through the month.
I looking back 1 year, and yeah, it did have a pop in April. April was the pop for the stimulus, and yeah, we're seeing the same kind of reaction here too. So it may be short-lived, though. It may or may not have any legs. But at least looks like the initial buys will be there. People will be buying some of the products, but that's interesting. So DG and Walmart both. Huh. Okay. And then someone said something about Carmen. SH.
Ken, you go away from your microphone. It got much lower.
Oh, sorry. How was that better? Are we better there? Or can you hear me better or not? Steve?
It's still not as loud as it was. It's like you moved away or backed off or something.
Oh, it hasn't moved. It hasn't moved. Hoping the battery isn't going because it sounds okay. All right. That's as good as it's
Yeah,
right in
you're
front of my
right.
mouth now. So is that better, Steve?
Okay, good.
Okay.
It's fine. I can hear you now.
All right. Sorry. All right. So SH Tushar, you said something. You want something?
No, I just said I posted some things to try. That's it.
Okay. All right. So Tushar, you said you published something, some list automatically. What was that list? I didn't see. I see the notes in the chat.
Yeah, that's the group listing that you can try it out and see how it works for you. It's working great for me. I publish this list automatically every day around 12:15 p.m. Pacific, 45 minutes before the markets close. And these are the daily signals to, I mean, I usually trade 45 days expiry verticals using that. You can choose whatever strategy you want to use, but it's just it just gives me a list of things that directionally either bullish or bearish to try it out. And try it out. You can see all the whole. Yep.
That's it.
Yeah, that's it. And you can go scroll down. I think I published about 85 of those. I mean, I think I started publishing since January.
Okay.
That will be the list that was yesterday, the first one. Yeah, March 19th. Yeah. So like say ANet, PRZU and things, that would be the list for that day published.
And what's your criteria there for that?
If you read the instructions, go back to the page. Yeah, on the top.
Okay. All right. We can see it. Okay.
Yeah, there's some disclaimers, but the first line, there's a tracking price momentum trend in multiple timeframes. That is the criteria. Best.
So this is the one that you're using for your verticals and your option trades?
Yep.
Okay. So now this is happening at the end of the day. Are you actually putting on those trades at the end of the day, or are you putting them on the following day?
Either way, it doesn't matter. If I don't have enough time, then I do it next day. Otherwise, because it's vertical spreads anyway, so I don't care for exact price. All I'm looking for X amount of credit and close the trade at X amount of credit received. I mean, that's it, percentage of X amount of credit received. So does not really matter too much of a price discovery. It matters only how much of credit I get. Sometimes I put it that night, or sometimes I put the order at night and let it open, and then it fills up at the same exact, because in the morning, these spreads are so wide that you can easily get fills at what you're asking for limit. Say if I'm looking for $1 credit on a $3 wide spread, and then if I'm just giving an hypothetical example, you might not get $1, but you might get 75 cents. And then, I put the trade in the morning, it'll get 75 cents trade, and that's all I'm happy about. And then I close it at 35 cents or 40 cents, or at the buy back at that much. So at least I make half of it. Or if I make anywhere between 35 to 50% of the credit received, and I'm done with it. Usually it takes less than 17 days to be done with it and then move on.
Pretty good.
So that's my strategy. So I just published this list because a lot of friends were requesting, hey, what do you do? So I said, well, I'm going to publish my list, and then you can just follow. If you like it, do it. Don't like it, don't do it. But if you go back to all this list, I mean, they're both sides, bearish and bullish. Success rate is very high. I'm not selling it, but I'm just saying, just try it out yourself. I'm not going to say the number here, but it's pretty good. I mean, you can just try it out. Say, hey, if you had traded a 45 DTE, sold a vertical spread on any of these, either bearish or bullish, you'll see, hey, how soon, or like say how fast you got out of it at 35 to, usually I average it out of 40% of the credit received. So if If I got a credit of $1, I'll buy it back at 60 cents and I'll keep the 40 cents.
So if I would, I haven't figured out how to do it, but if I could automate the evaluation process on this, and I put in a, like you say, either bullish or a bearish spread on these things, would I see, do you think I would see a positive expectancy across all of them, just blindly putting them on there? Or is there an additional level of analysis that you do beyond this?
No, just put it blindly and close it at a certain target and keep watching, monitoring. If I'm wrong, I get out fast. I mean, I follow my signals. This is only entry trades. There are no exit trades. Exit trades depends on what strategy you use, you know. So to me, I just sell a credit spread and then I put an order right away to buy it back at X amount and then leave it. And also put an alert at the exact same point that, hey, if the value of this credit is going, I mean, if I have to buy back higher, let's say $1 or let's say $2, then give me an alert. So the next day I can, whenever I get a text message, I go and close it, you know, depending on whichever target you have. Or also keep monitoring them on my chart. And when I see my arrows, hey, this is, you better get out, then I get out.
So what is your credit to spread ratio? Do you have a particular target?
Okay, so whenever I open a trade, I'm usually going to get 25% of the credit of the spread, anywhere from 25 to 30. And if I close it at X amount of the credit, my target is always 10% plus return on capital that I use for that trade. So 10% ROC for that trade in 7 days, great, I'm done with it. Or 17 days, less than 17 days, yeah.
Okay.
So say,
do you ever see anything that gets up to a 50% number or not?
Oh yeah, if I'm right, I mean, this is all theta trades, I call it. If the delta is right, I might get more than 50%. I might close it, but I never wait for it. I like to take the capital off the table and then use it somewhere else because it's done.
No,
so there are so many stocks. There are so many alerts.
I'm asking, you said you got a 25% credit over the spread. Do you ever get anything that's closer to 50% or not?
Well, yeah, if you go closer, if you go at the money, you will. But I like it to be out about 30, less than 30, I mean, less than 30 delta or up to 30 delta. Awesome. And also I look at the other market profile references to stay away from it so that at least I know that I'll be wasting a lot of time here and on theta on it. That's the whole strategy.
Got it. Okay. I have a better, every time I talk to you, I get a little bit better understanding of your strategy. So thank you.
And you're welcome. Yes, I know. I'm using this strategy for like almost 6 or 7 years, and I love it. It works. It works in every time frame for me. So I'm okay with it. Yeah. Good.
And yeah, so it would be great to get the statistics on that to see what is your expectancy, what's the how many days you're actually in a trade, average, standard deviation, those kinds of things. I don't know if you
I know. I think I shared that one time, the actual performance somewhere in 2016 or something like that, and it's almost mimicking the exact same thing moving forward. So I kind of stopped publishing all those data. And expectancy, it's a relative term. So I don't go by expectancy because I mean risk is relative. I'm not gonna take the whole risk as a whole spread as a risk. So I don't know. I mean, how do I calculate that? It's difficult to calculate exactly when you do a stock trade stock using certain strategy and kind of find expectancy at this arrow and this arrow get out. It's kind of hard to do with credit spreads because I'm closing it at certain X amount of credit because I'm not waiting for any arrows. So it's like, I do not know how to calculate that. So I kind of gave up on that. Sorry.
So what you do is you send me a list of your trades, your entries and exits, and I can do that.
These are the list from January 29. That's, you can follow any one of them. We use 30 delta trades and
so no, the net result, the end result of the trades. So these are the proposed trades, but then the actual trades, like what Steve does, Steve has got this actual accounting of every trade that he did, his entry, his exit, etc. And so what you can do from that, you can basically say, what's your profit factor? For every dollar you lose, how much money do you make? Right?
I risk to make one. I mean, in general.
Okay.
So I mean, yes, that's the criteria. I mean, I published this data, exact data from my Thinkorswim platform one time, and then it's kind of a lot of work for me to do. So I say, hey, it's working. I don't need to prove it to anybody. So I don't publish that data anymore. So sorry about that, but I'm not inclined to do more work on publishing data.
No. It's just, I was just a curiosity for me. I would like to get an idea, a handle on that.
I see.
I mean, even when we do the trading that I do, I'm basically looking at an individual stock and an individual strategy, and I got the back test. I can get my profit factor. Everything comes out of it in those simple analysis tools, so I can actually see. And then, of course, I look at it over a whole year to see how I've done over the whole year.
Sure. Yeah.
So if anybody is so inclined to do spreadsheets, there is this really on YouTube. You can see on my chart, on my thing here, it says Google Sheets Advanced Tutorial. This guy has done a fabulous job of a hour and 35-minute tutorial on Google Sheets. So if anybody is so inclined, then go and look at the show more. See the show more thing? Click on that. And what he did, beautiful job, he indexed the entire video. So if you want to see how do you do inserting data charts, you click on that and it takes you directly. He's got it's basically a link directly into his bookmark of as 13 minutes and 15 seconds into it that starts it at exactly that point. Or if you want to know how to do if functions, you basically click on this and you can go directly to his if functions. He did a really, really nice job of putting this whole YouTube video together. I don't exactly know how he did it. There's another program called Camtasia, which you can use for video generations for YouTube, and they will actually create an index for you when you do the upload. I thought that was fabulous. I have never done that. I was trying to do that with a few of the videos that I posted here from Investools and Excess Profit stuff, and it is tedious the way I'm doing it. So he's done it with some sort of automation, as well as he's done a fabulous job of this tutorial, and he shows how much better, in my opinion, how much better Google Sheets is at dealing with the subtleties of spreadsheet designs and stuff. So kudos to him. Very, very nice job. So if anybody's so inclined, check that out. And then I'm not going to post it. I'll just do a search for this. You'll find a gem. Okay. All right. We've got about 3 minutes. I will take some of the things in the chat that I saved so that I can put them into the Investools recommendations for Monday. Tushar was one of the most had the greatest number of contributions here. I don't know if I'm going to be able to put all of those into this radar screen for next time, but it will be interesting to see how all that comes out. So,
Ken, I know that list is big. What I can do is next time I can share like how you can use this list to check it out, how the trade would have performed in Thinkorswim. So everybody can try individually whenever they can and understand how the credit works and things. It's pretty straightforward on TOS platform. You don't have to write any complex equation. Just
Excellent.
Simulate a trade in, think back and see how it works. It just works great.
Excellent. Excellent. That would be great to share that with us, Tushar. That would be really, really wonderful. So I'll put you on the agenda for next month or not?
Yeah, that would be great.
Okay.
Yeah.
All right. So next month we should have Brian and Tushar presenting. That'll be wonderful to hear. So, all right. Any other comments, questions before I shut this down? There are. Let's see, anything else anybody else has got? So look for the gallery view. Anybody? Be nice.
I don't know if it,
faces.
Ken, I don't know if it's at this point, only a couple minutes left, but airlines. Is anyone trading airlines? LUV is the one I'm looking at. I'm trading. And
Judith, I'm in FLY. It's the ETF, and it's done pretty well for me.
SL?
No, FLY.
F.
Yes.
Sierra, Lima.
No, Foxtrot, Lima, Yankee.
Oh, thank you.
Oh, fly. I cannot hear the F. Thank you. So fly. All right. Oh, interesting. That's an interesting one. Huh.
It's an ADR though. Okay. I usually avoid ADR. Personally.
Oh, good.
Yeah, you get an extra little fee. ADRs. Well, love is one of those that just keeps flying up, but at some point, right, they're going to pull back. Delta, United, JetBlue.
So are you? How did you? Have you entered love or not?
Yes, I am. I'm currently in love.
Okay.
She's currently in love.
I'm currently in love. and I'm just waiting for when that bubble's going to burst.
Yeah.
But
no,
I mean,
don't burst your love bubble.
It's in general, right? That now that the economy is picking up and that there's a project, I mean, the business flying will not come back the same way, I don't think. I mean, the information doesn't look like everyone's excited about going back to the office and traveling, but the leisure part is going, to get a nice pop. But it could be the news is already baked in. So I'm just cautious.
I don't think so. I think there's still a lot of skepticism yet about whether it's going to open or not. I heard, listen to Fauci, and one time he says it's going to open up, and then next time I hear him, he said, oh no, not for another year or so. It's like I have no idea. So I think there's a lot of skepticism in the market.
Hey Ken, this is Catherine. I told you that Fly was the one I was making money on. It's not. It's one I'm watching. The one I'm making money on is Jets. JETS. I had to look at my portfolio.
Okay.
What's the symbol?
JETS, Jets. I mistook it. I exchanged it for Fly. Fly's not the one I'm in. Fly's the one I'm watching, but Jets is the one I'm in.
Thank you for that.
All right. Yeah, and Jets has money flowing in there. People can see my screen here, so money is flowing in. It's got a nice trend. It's got quite a bit of pullback though. It's got 10% pullback that it's doing regularly. So, but okay, all right. All right, very good, people. Thank you all for coming. I am going to shut this down unless there is something really hot that someone wants to bring up or say. I thank you all for attending.
Thank you.
Very educational.
Thanks for hosting.
Thank you.
The bunnies are great in the background there.
Thank you.
In time for Easter.
Yep.
Thank you, Ken.
All right, thanks. All right.
Bye-bye, everybody.
Thank you, Ken.
Bye-bye.
Thank you all.